How's it going? Welcome back. It's Jonathan. Now, the last time that we put out a video, we had a few turn dates for the market ahead, and they were around the 25th. The another one was around the 27th, 28th, and then out to around the 30th and the first time frame. Okay. So I wanted to take a look at where markets are today and to get an idea on if I am actually bothered at all with the actions on the market, or if I think that everything is running smoothly and where we should be looking next. So there's a lot of fear in the market still. A lot of people are worried that this market's still turning down. Is it turning down? Well, I will go over a few things today and explain the risks that we have to face right now. But also, I still am primarily leaning towards the bull side over the bear side, and I'll explain my reasoning throughout the day for this one, because the action that we're seeing in the market is still normal. I know some people are doing some analysis between the Dow Jones Transportation Index and also the Dow Jones Average, and they're saying, look, there is a current decoupling at the moment where the Dow Jones Transportation Index is diverging from the averages, and that has generally in the past signaled that the market is likely to turn over. And that is true. We need the averages to basically to be confirming the trend with the transportation index. So I'm not disputing that at all. But what I am saying is that I reckon that there's just probably one more push up, okay? And that's all I'm trying to suggest, is that maybe a little bit bullish for a little bit longer. And if we're not going to get that, then I'm not going to worry, because I'll explain the two factors that I'm looking at right now. So the first thing that I want to do is go over the weekly chart. Now the weekly chart, there's a few rules we need to follow, okay? So I'm going to try and do this for you and give you some of these reasons. So a trend is defined by 12 or more bars in the direction of the trend. So for example, we can see that there's 12 or more bars in the direction of the trend higher. Okay, so 12 bars, and they keep running higher and higher and higher, and they're going in the direction of the trend. And then we have this section down here, yeah? And now I'm using a little mouse on my keyboard, so I'm probably not going to be able to draw as well as, actually I can't draw at all usually, so this is going to be even worse than normal. But I'm just going to count this, okay? So if bar number 1 is what you'd normally call the highest high, we classify that as bar 0. And then we have number 1 beside it, and then 2, and then 3, and then 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. We can see that we have more than 12 bars in the direction of the trend. And the trend was broken, or the trend was confirmed right here once the lowest low was breached. Okay, so technically speaking, we're in a bear trend, and we happen to be in a bear trend around the 8th to the 15th of March. Okay, so should we expect markets to fall from here? Well, yes, we're technically in a bear market according to Gann's trend theory, which has basically activated right here. Okay, so we're now in a bear market. So if we can consider that, yes, we are in a bear market, why are you still bullish? And the reason why I'm bullish is because I'm looking at the mass pressure charts, I'm looking at the cycles, and the cycles are still pointing higher. And I'm not talking about cycles that everyone can see, okay? If everyone can see these cycles, and I don't publish these publicly, if everyone can see these cycles, then, generally speaking, it doesn't happen the way that we're expecting it to. But the cycles that I'm looking at are still pointing higher, and that has given me reason to believe that unless this bear trend continues to fall lower and invalidate that cycle, or we get a complete inversion of that cycle, that I would be still primarily bullish over bearish. Now, if you can hear the background noise, I am recording this in the car, basically right beside an airport at the moment, so I might try, if I can, to block out that background noise in the post-edit. However, that noise that you hear right now, that is an airplane, so excuse this. So yes, we're in a bear trend. Now let's take a look at some other things. So I was saying that there are a few turn dates that we were looking for, okay? So I'm going to put the date marker back on. Now the first one I believe that we're looking at was around the 25th. The market did find a top on the 26th. So 25th to 26th, I'm not going to complain with that, okay? Basically, it came up and reversed on the 26th, which is within a period of orb. The next date I was watching was the 27th to the 28th, and as we can see, the market came down into this period, and it didn't bottom until the Monday after the weekend. So I did mention in the last video that there was a Friday, and I would probably be looking for that bottom to occur on a Friday. Looks like it stretched even further and came out to that Monday time period where we're getting this basically, so Friday is the 28th, Monday is the 31st, and we're getting that reversal. So it came through this one and all the way down to this one, and we have reversed. Does that mean that I should be looking lower because the turn date was invalidated from the last video? No, this is how we need to move between the turn dates. We need to know that occasionally one of the dates is going to invalidate, and that was this date in here. It invalidated, and it's going to also invalidate in the past when we probably had a turn date around here, just invalidate, where the market's just down into its eventual low. That's going to happen. Okay, we need to recognize that these are going to happen, and then just jot on our chart our future turn dates and just watch the market action around these dates. Now, if we go over to the NDX, we'll notice that the NDX, which is the Nasdaq, we'll notice that the Nasdaq has actually formed a lower low. Okay, so it's broken even further lower and then has reversed here. Again, same date. Okay, so it doesn't matter what market you're looking at, we see these same dates playing out. So this is the 25th, which made the actual top, which was a turn date on the Nasdaq. However, on the Dow Jones, actual top was made on the 26th. So the dates work. They just present themselves differently in different markets, and that's why we need to adapt to the market we're trading. And then the 27th to 28th turn date did nothing. And then we had our weekend break, and we had around the 30th to the 31st, which was the next break that we were waiting for, and we can see the reversal. So am I still primarily bullish even though we're still breaking lower? Yes, and the reason for that is because we've seen these kind of moves in the past. Now, that doesn't mean that it can't break lower again. Now, this is where we cut off. I would say that if the market's going to basically fall lower, this is my cutoff period, okay? So if the market continues to fall lower than this, I would not be holding that bearish bias, at least out until April. So giving it, another week or two to confirm its move. But if I go back in the past and I look for another March period, for example, and the major date I'm looking for is around, a repeat of around that 21st time period. Okay, so nothing happened here. So we're going to go back because I want the market to either continue moving higher or lower into this date, just so I can exemplify this. So nothing here. And let's go back another year. So March around here didn't occur here. Going to keep going back. Also didn't occur here. It does happen occasionally, and I want to see if I can show you this. Didn't occur here. Maybe I'm not going to get a nice example. This is probably a nice example. We're probably looking for a reversal around this time period in the past. Okay, so we're coming down into this equinox solstice sort of transition period of the 90-degree angle, so into the equinox. We get our reversal, and then the market moves down even lower again, and it comes down kind of into the beginning of April before reversing. So that's why when I replied to the guys in Mastering the Markets, I said, look, if we fall down lower, there's that noise again. If we fall down lower into the beginning of April or even out to April, I wouldn't invalidate the whole idea just yet. We had this steep decline down lower. However, the market did reverse, and then it found another bottom into April, and then it reversed from there, and then didn't actually fall any lower. Now, we know that for sure that, with hindsight, we know that for sure we were in sort of a bear market, sorry, not a bear market, a bull market, and then we continued going up and up and up until around September, and then in September, then we fell lower into December kind of period. That was around 2018. Now it's a little bit iffy because everyone's looking at all these indicators. The market's gone up and up and up. This is 2022 period. Let's continue on. This period right here, the market's gone up and up and up, and then it's reversed, and everyone's freaking out because the market's falling. They're looking at tariffs, etc. This is the NDX. If we look at the SPX or even the Dow Jones, they can see this bullish run and then this reversal, and they're all scared right now because this market has come down. I would say that until we get some continual declines lower, okay, so especially on the Dow Jones. The Dow Jones, if we continue to get this lower high, lower low, lower high, lower low, all the way down, and we continue, I'd probably even say break that 40,000 mark, down here at this red one right here, which provided some strong support in the past. I would still maintain that bullish look, okay? That's just my thought process and my thinking. So I'm still primarily bullish, and I know a lot of people are having their indicators flash and they're going, oh, the bear market's in or the bear market's almost in. I'm still primarily bullish, and I'd be looking higher because right now things are not invalidating my observation. So maintain it. We'll continue waiting. If the market drops lower, then we'll reassess. However, everything I'm seeing still business as usual for this bull run. Okay, so could be wrong, and I'm not saying that you should be long or going short or anything. I'm just giving you my analysis on the way that I'm analyzing the Gann cycles. Okay. So another person had asked if I could update the Bitcoin curve out to this week. So we're going to go out to this week because I think it's quite critical that we do this. So we start our week on Monday, so the 31st. So I'm going to now update this to the end of the 31st. We want the morning of the 31st. Yes, so this is the 31st here. So yeah, I'm going to do this right here. So this will encapsulate Monday into Tuesday. And the cycle that we have for this week. So this week goes out until the 6th. Okay, so let's go ahead, make it a little bit bigger, out until the 6th. A little bit out more. Okay. So the cycles are indicating that the market is likely to put in a bit of a bullish run over the next 24 hours, but then come down into around the 2nd to the 3rd time period. Okay, so still possibly falling maybe one or 2 days more. That's just the weekly model. Okay, so this doesn't indicate where we are on the yearly cycle. It doesn't indicate the monthly cycle. This is the daily cycle and the weekly model. Okay, so we're looking just 1 week out into the future. So anything that's past the 6th, you wouldn't even look at, because the model will invalidate itself after that. So I'd be watching for a possible low, around this time period here. Don't look for the absolute low, which is going to be 4:24 p.m. on the 2nd to the 4th, and this is based on GMT 0. We give it an all period, which we're looking for around a zone. Okay, so 2nd to the 3rd time period, where we'd probably be watched for a low. If the market continues to move higher, then we would flip this cycle, would invert it, and would say, look, there's possibly a high. Now, the reason why I'm looking for a low around here is because we got both the blue and the red cycle coming in at a low. Okay, when they sync up, it gives us the good moves, and when they sort of inverse, we kind of get a bit more, it's a bit more trickier to understand the move. So both of them are moving up into a potential top over the next 24 hours. The blue one moves down and then up, and before they both move down, and then they kind of stabilize. And then we have another potential top around the 6th before they both trend down into the 7th. Okay, so keep that in mind. I'm not saying that you're going to get these exact moves with price. What I mean by that is, I'm not saying that we're going to go from 82,000 down to 81,000. These are directional biases, and you need to play the directional biases with your price analysis, etc. So that way you can go ahead and get an idea on what the directional curve is for the market. Another market we might look at with this, let's go to the DAX 30, just for those who are interested in this model. This is a monthly model. Okay, so we got to do it on the monthly basis. Just going to load the data in, and this is a planetary cycle as well. So we will see what the planetary cycle is looking like. It's loading it in. It's Mars, Saturn, heliocycle. Okay. Alrighty, so if we're going to be following the green cycle, which looks like it's the standard cycle, not the inverted cycle, looks like the market is, and I'm going to just go back to the end of last month, looks like the market is trending lower, which means it may find a low around that 3rd to the 5th time zone, before heading upwards for the remainder of the month. We'll see what happens on that, but if we go back into the past, we can see that these cycles, again, it depends if it's inverted or not inverted. We need to just follow either it's going to be an inverted cycle or not an inverted cycle, and then we would go month to month. So it'd be March, the whole of March. So the market's moving up, market's moving down, market's moving up, moving down, moving up, and moving down. And as we move into next month, we need to gauge if the market's moving up or down into this period. And it looks like it's moving down into this period, not up into this one. You kind of get the way I'm explaining it here. Market's moving down, then we'll be looking for that low. Okay. So do I maintain a bullish bias on the markets? Yes, I do. What you do is up to you, entirely up to you. For example, you could maintain a bearish bias. We are in a technical bear trend going by WD Gann's rules. However, cyclically speaking, we're still bullish. So I would not be surprised if we see this reversal. Okay, and that is my reasoning why. Okay, so I've explained the cyclical reason why, and I've explained that, look, we're still moving within these turn dates. I've got possible change of idea if we get below a certain point, and these are all the reasons why I would still be primarily bullish over bearish, and we'll only find out at the end of the year if we're going to be bearish or bullish based on this market behavior that we're seeing now. And we'll only be able to learn from the market behavior that we're seeing now. But I think that April's likely to be bullish over bearish. And if we're to experience any form of bearishness in April, it's going to be possibly mid-month. So from around the 10th to the 20th is probably when I'd expect any bearishness to come in. However, I think for April, unless any cycle inverts, I hold a primarily bullish outcome for the month ahead. So that's all I have. I hope that this has been beneficial to one or two of you out there, and if it has, you can leave a comment, and we're more than welcome to discuss your reasonings as to why you're bearish or bullish in the comments below as well.